All right, everyone. We're gonna look at Lulu stock today. I didn't have its earnings, but I've been kind of watching this for a while, and I think it could be interesting. So, we'll do three things. We'll look at the latest earnings, we'll look at the current valuation, and then we will look at kind of some other things to consider, whether that's insider buying or any catalysts or short interest or things like that. So they released their latest earnings on March 17th. And you can see here that they're basically flat year over year, at least. Gross profit went down a little bit because their COGS went up. And so you're looking at a gross profit about 55%, which is not bad for this industry. I guess I'd have to look at its competitors, but that's not bad. And then selling G&A and all that sort of thing takes away about 32% of their gross profit. And then their income from operations right here is down to this 812 million. And then we're getting, after you take away taxes, then you're looking at a net income of about $500 million, $600 million about, which is a decrease year over year. And we could check quarter over quarter. But overall, this is still, in terms of just like company health, healthy company. But Wall Street doesn't care about company health for a stock like this. They're going to care more about what's the future look like. Are they growing? What's the forecast? Things like that. So still fun to look at, but just something to note. I did see here that they have quite a bit of other income from something, probably from their balance sheet, which you can see right here. Their cash and cash equivalents, they have almost $2 billion of cash and cash equivalents. But I believe that's largely offset by the debt that they have here. I don't want the current liabilities. Maybe they don't. I know they have some debt. I'll look at that. Well, we can see it here. Let's go to the financial. Oh, nope. Sorry. Let's go to the financials. I know they have some debt here. Long-term debt. Well, I guess not. Yeah, no debt. So that's even better, which I don't know where I read that. I thought I read that they had debt, but it doesn't matter. So no debt. So that's great. And, that's what allows them to have this other income, positive, is they're making, some money from the cash and cash equivalents that they have. So, if we look just to kind of see the trend of the growth here, I want to see let's check one last thing here. I want to just see the statement of cash flows right here. Net cash used in investing activities right here. This is in financing. And the reason why I'm looking at this is because I'm pretty sure this is stock buybacks. So they're decreasing the float. And then investing activities, they're probably CapEx or stores or whatever, and then they're making a lot of money from their operating activities. But there's probably a lot of buybacks here. We can confirm that here. How many buybacks has Lulu done in the past year, and does it offset stock compensation? Okay, 1.2 billion on buybacks, 5 million shares repurchased. Okay. So yes, offset stock-based compensation. The share count has decreased a little bit, 3 or 4% year over year, which is nice to see. But yeah, that's nice. Adds to the earnings per share. So those are all kind of nice things for like a good old cash cow company. But the reason why this stock is beginning wrecked is because the growth has been slowing and the forecast has been going down, and there's like this perception that that the brand is losing its flair. So you can see right here, it's down 65% over the past 3 years, and maybe that keeps happening. And I think that the valuation is where we'll look now. As you can see, you have a market cap of $15 billion, and a trailing 12 month P/E ratio of 10. Now we want to see more about what the forward PE ratio is, because that's going to matter more in terms of valuation. So we'll just ask that. What is the forward PE ratio of LULU stock, and does it make it overvalued or undervalued to its peers? All right. Forward P ratio is 12 to 13, which is pretty low. It's basically meaning for their forecasted earnings that they have. Let's just use an example of the net income they had this quarter. So about 600 billion. So times that by 4 for each quarter, you're making $2 billion every year. And you have a market cap of $15 billion. So, the question, do you need $15 billion to create $2 billion? And according to the market, this is pretty low. So, been compressed quite a bit. You can see Nike's higher, which is amazing because Nike's getting wrecked. A lot of these are higher. So yeah, it's looking cheap if you compare it to the peers. And then it's going on more undervalues, high margins. The margins on this is like 50%. But as you can see, the growth is slowing. So, one thing I want to ask it too, what is the growth for? So like the return on capital for CapEx type stuff. Yeah. So very strong growth, which is great to see. Yeah, returns 2 to 3 higher returns on capital than peers. So that's pretty good. But it has declined a little bit. And again, that's what this story is all about, is this decline in the forward looking. Let's check here this too. What did LULU stock forecast for sales in the US market and then in international markets? Because from what I think I remember about this is that the international market outlook looks pretty strong, even though the US market is weakening. So expected growth in US and North America is a decline. So that's going to massively hurt the valuation. If you're not growing, it doesn't matter how cheap you think the valuation is, you're in a value trap. So that's scary. But then in the international markets, you're seeing high growth. So international is still pretty strong, growing, lots of growth in China. So that's a big deal. Does the international growth offset the decline in Americas? Okay, so it does, but not enough to reaccelerate the growth that they used to have. So when you look at LULU and you're thinking like, man, they used to trade at a 25, 30 or whatever PE ratio, the only way it's going to get back to that is if they can get their growth back to what they used to have. So it's all going to depend on that getting back to that level, because if it doesn't get back to that growth level, the market isn't going to give Lulu a premium valuation anymore. I should say that. It's not that it won't give it a premium, because what it was trading at wasn't necessarily premium. Right now it's trading below all of its peers, but it just needs to start growing again to get that valuation back. So that's really, for me, that's the big deal on this one is, can the international market grow? Can they slow down or even start growing North America again? And that's kind of how you can determine if this is a good buy. Are insiders buying the Lulu stock? What do they know? Um, a little bit. So about 3 million. But insiders are actually still selling, according to this. CEO sold. Remember though, the CEO gets compensated with stock, so remember that. A lot of senior executives sold. They're not accumulating shares, not strong insider confidence buying. So yeah, this one's tricky. I think this is interesting. I think this is a very interesting stock. And you'll have to let me know what I'm missing or didn't think about or didn't consider. But you're really kind of, the story on this one really is, can you start growing again? Can the international market offset the decline in the Americas? So yeah, super interesting stock. Let me know what you think, and I'll see you guys in the next